The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I posted the chart of this gentleman that sent this thing out on Monday. If you remember, our friend Mike up in Canada forwarded it on to us. I tried to contact the young man. He did tell me he was 50 years old, but he's basically, he doesn't trade at all, never has. He just researches in the market. And he is basically pretty much a recluse. I offered to have him on the show to chat with us about what he's doing and stuff like that. He had absolutely no interest in that. When I offered him the usual $10,000 per session fee that they pay here at TFNN for our guests, he didn't even respond to that. That was very surprising to me, but who knows? And if you believe that, boys and girls, I still have 2 shares of those Brooklyn Bridge that I keep right here on my desk. I'm being warned right now. Hold on just a second. Hold on just a second. Okay, hold on just a minute. All right, let's move on. Someone just asked a question. Let's take a quick look at something that's in the news. And I want to give you a little bit of heads up here. This is the, shut the front door and raise the rent. Give me a second here. I have these charts set up, and they've got to work exactly the right way or I'm in big trouble. Okay, now should be the chart of Tesla. Would everybody in the room let me know what we're looking at with Tesla today? Because it was in the news, him selling his shares and all that stuff. But all I wanted to show you here, folks, is that the low that we made yesterday, we talked about here in the show, we couldn't show the chart, but the low that we made yesterday was within $1 of the exact 382 of the yearly low. I mean, right on the low at 960 or what it is. Now that was a 382. Now, taking that one step farther, if it was 382 on one side and the market started to rally, what would one expect it would be if it was going to rally? Well, boys and girls, believe it or not, I would expect it to do a 1 or 0.382. If you look at Tesla today, that came in right around 1100. The high, I believe, was 1107 or something like that. It's immediately dropped $50 from that point. So that's what we do is when we look at these ratios, they tell us where entry points are, and of course, when they're wrong, you just stand aside. Don't get in front of it. You don't really want to do that. Now that was just Tesla. I'll go through a couple other things. I did want to mention that this new car company has come out, Rivian. It is worth more than Ford and General Motors, folks. Do you realize that it's only been in business since 2009? That's 11 years, and it has more capitalization than General Motors and Ford. This to me is amazing, and I don't know how successful it's going to be. It's an $85,000 truck, and of course everything is electric these days. So we'll see what's going to be looking at here. We'll go from that level right here. Okay, now let's just move on here. No, Dana, you were wrong about the Bitcoin, Bubba. I'm afraid you're wrong about that one because I've been following John Jameson now. Well, I've known John for almost 20 years, but I've been following on this crypto stuff for a long time. And no, there's too much money into it, Dana. You've got trillions of dollars in it now. The big boys are playing now. They've got it on the exchanges. And there's just too much. John gives me the analogy that we are at Promontory Point in 1869 when the 2 railroads met, the Southern Pacific or the Union Pacific, and what was the other one? I can't remember. But anyway, they met in Promontory Point, and then they expanded as each time they laid some track. Every time they did a mile of track, they were given the north side of the railroad tracks, and when they expanded to the other side, they got their 1 mile down. They got 1 mile. That was 680 acres. It doesn't make any difference what the value is, Dana. I can't, Dana. I can't get into an argument about it, buddy, because I don't really know, and B, I don't really care. All I know is I listen to people that are a whole lot smarter than me and explain to me what it is. And the fact, if you look at the market, what it's doing, I mean, this thing has gone from just a few cents to $68,000. Sure, but that's not a bubble. See, a bubble goes straight up and straight down. These have gone straight up, straight down, straight up, straight down, straight up, straight down. This has been going on for a long time. So there's something technically there. We don't see it. And believe me, that metaverse stuff that they're doing with Facebook, and the reason why basically Tesla is pretty much a $4,000, $5,000 stock is because it's not related to selling automobiles or anything like that. It's about the data that is involved with this stuff. So that's why these things, I think, are so very important. And I don't know, but I understand where people are coming from when they look at the stuff. And it's the most difficult doggone thing in the world to try to understand. And I always try to get John on the air here, but he's a little reluctant to do it because he knows there's people that don't believe it, and he doesn't want to spend any time with those because he feels they're wrong, and that's it. Let's cover a couple things that I think that we missed yesterday that to me are very important, and I think that's what's important to me, since this is the show that I'm doing. By golly, that's what we're going to do. Here is the copper we were looking at the other day with Mr. Z. Now, I wanted you to see that dark red line there. You see, that's what we call the 20-min line. You have 1-2 hits on it, comes right down to a fib ratio. You have to have three things. You have to have at least 2 hits, and it's got to hit a fib ratio. That's what you have to do. And we're right there. We're up to got up to 443 today. We need to get it up to 449, which is the 382 retracement. But I really want you to focus on the turquoise line, the blue one. That's the 45-degree line, or the 1x1 line that Gann used. Now, Gann was he was a 33rd degree Mason, folks. And believe me, the Masonic Lodge and the Masonic order, they know Fibonacci and sacred geometry. Well, the big G is, right on their shields. And that's for geometry, and you can't have geometry without Fibonacci. And so they knew all about that, but nowhere. And then Gann wrote a lot of stuff. Oh, God. He had 2 full moving vans of stuff that Billy Jones bought from Lambert. Ed Lambert was his partner, was Gann's partner, and he had all the materials, and Billy Jones bought that from him in Florida. He was in Fort Lauderdale. They moved it to Pomeroy, Washington. This was in 1978 or 79, I believe, because Billy Jones was one of my customers at Drexel, and they had all that stuff up there. 20-man went up to Pomeroy, Washington to go through it and stuff. And when he came back, he said, Larry, there was so much stuff. He said it was like reading Egyptian hieroglyphics. And so anyway, that 1x1 line is basically what he used for his trend analysis, is what he did. Now, nowhere in Gann's work does he use the word Fibonacci, not one word. But I'll explain to you why in just a second. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the opening call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TESS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TESS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TESS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, so getting back, we were talking about W.D. Gann and the fact that he never used the F word, Fibonacci. And the reason why, folks, he was a 33rd degree Mason, and they were doing everything in eighths. So 3/8 is 382, 5/8, 618, et cetera, et cetera. 8/5 is 1.618. Now, all these things were done in eighths and quarters. And remember, back in those days of stocks, they trade in, quarter half, quarter half, quarter half. That's what it was done. Hold on. Some Mr. Z saying Larry Williams exited longs Friday, November 5th. And it's Express Life. Mr. Z is telling me that Larry Williams said that November 5th was a potential high in the stock market. He exited his longs, and he expected Friday may be high. That's what we showed that little diagram that dude had. But I'm in contact with Larry quite a bit because I've known him for so long. And he's a really smart dude, and he's really fun to be around. Let me tell you, he's not only funny, but he's smart and he's very generous. So it makes it a really good thing, folks. Now I posted a couple of things here this morning, but there's 2 things I wanted to show you. The first one is this chart right here. This is what we're going to be doing on the all-day session that we have coming in on the 17th, and hopefully Tommy Hugard will be able to join us. It's a question of whether we can get the logistics done. Right now it's iffy-diffy, but I think we can do it. Now, this is the type of chart. I didn't put it up there because I didn't want to show you what it was or anything like that, but this is the type of chart that we're going to be looking at. We're going to be trading a very, very active market that moves quite a bit, and sometimes people use it to run their cars. Oh my goodness, it's crude oil. This happens to be a 4-minute chart on crude oil, and all I'm looking at the fact that it makes a perfect 3 drive to a top pattern. Now, at that point right up there, which was around 82.30, I knew that I didn't have to risk more than $30. Well, that broke $1,000, folks. in that break that you see right there. Now that is what you're looking for when you're day trading, and that's my bread and butter. I look at that as often as I can to try to find things, and that's what we'll be doing on the 17th. Like I've shown you my graphs before of what I look at. I have crude oil, gold, the natural gas, another incredibly beautiful pattern that we've talked about here, and we're going to talk about it again in just a few short minutes. But along with the soybeans and some of the others that will be following, real active things. And we're going to do a few stocks too, because there are a lot of stock traders that wonder how this stuff works. You see what's happening with Tesla. We've looked at Apple. I mean, they don't work all the time, but they work often enough that you can, feed your family, and that's the main thing. Now, this chart is the one that we really were focusing on this week. And this is you see that red line, that downsloping line. That's when it broke the trend line there at 530, 528 actually. We went all the way down to 471.60. The low that was the ABCD. The low was 472. We've now rallied over $3,000 in that. And that is a major pattern down here, folks. I mean, look at that. You've got a really beautiful ABCD pattern there that lines up perfectly. You take out the lows of October and don't go anywhere. I mean, that's an ideal situation. So this looks like it has some legs. So one of the things we're going to be focusing on is we want to find the first ABCD correction in this, say on a 15-minute or a 30-minute chart, to get in and add to the position. So that's what we'd be watching if we were in this trade. And that's what the kind of things that we want to be thinking about and talking about. And since we're doing that, I want to mention that we're going to have Paula Douglas tomorrow will be our guest. Next week, I'm going to have a full week on Monday and Tuesday. I'll have some guests in. We'll have Tim Boss, probably Jeff Huge. And then on Thursday and Friday, we will have Stan Harley and hopefully Joe DiNapoli. I'm doing my best to get Joe on. And then on the 17th will be the full day of trading that we do. We have a setup that's very interesting, folks. Since we just did that one in the crude oil, here was one that we were doing today, and it's still relatively active. It's not working it's profitable, but it's not working very well. This is the euro, folks, over the last 10 days or so. It's I believe it's the hourly chart. Yeah. And you'll notice here that we have been down at this level D for a long time. That came in at 114.60 is where we bought it. The low has been 114.50. It's trading around 114.68 right now, up about 8 pips, which is nothing. But this is a perfect pattern. It's a perfect setup. And if you can't do this one, you can't do any of them. And that's the main reason. The reason why I'm spending some time talking about this is because it has several different parameters, and one of them is the fact that the euro, being 53% of the dollar index, the best thing you want to do is to go to the dollar index and see what it's doing, because it will give you a pretty good idea of whether you're getting close to a major high or not. And I've done that. The $64 question is, let's get it up here. There we are. Give me 1 second here so I can make this a little bit bigger, the best I can. Now, this is a weekly chart, folks. So everybody that's been listening to me for weeks now, we've been waiting for this to be hit, that 382 level. And by golly, we hit there today. We went above 95. We hit 95.07, 08, something like that. The highest level I could see was 95.17, and that doesn't mean that I see it. I mean, it could go a lot higher than that, but that's set up perfectly. Now, what that euro trade represents is you have a double ABCD pattern, as you can see over the last 10 days. Okay, you can see the beautiful 3 drive to a bottom pattern, very, very symmetrical. Okay, coming in just exactly like you'd like to see it. Now, this has some really good information on it, because the gold, which we've been extremely bullish on these last couple of weeks, and especially yesterday, and even I still think we're going to hit sometime between now and Monday, we're going to hit 1878 in the December gold contract. Anybody that follows the 24/7 group or the newsletter and stuff, you'll notice that we've been watching these levels, and that's a big ABCD on the daily. And so that's going to have really important information for you, because here you have the dollar index making a high, with gold making a high, that is contra to what the markets usually do with intermarket analysis. Usually when the dollar is strong, okay, gold is weak. Now we've got a strong dollar and strong gold, so something different is happening. Now that may or may not mean anything, because I don't think past that. And the reason why is it's over my pay grade. There's so many things that you could consider on why the dollar could be strong and the gold could be strong and vice versa. I don't need that. All I need is that little bar that tells me whether there's buyers or sellers. It's that simple. That's really what you look at these things. Everything I do is related to these A, B, C, D, and Fibonacci numbers. This is not hard stuff to do. Trading is simple, but it's not easy. It takes a long time to learn to be a trader. And I've got here in my house, I must have a couple thousand books here. When my students come to visit me, before COVID and after COVID, I'm sure they will. But some of you guys that have been over here 3 or 4 or 5 times here at the house, which is great. But, they come in, the first thing they want to see is, some of the books in the library. And some of them are, really old, and others are relatively new, but they're all about trading and psychology. And that's my journey. So we'll be right back. 877-927-6648.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I want to cover a few of the charts from the frustration day yesterday because I thought it was, this is from the 9th, day before yesterday. This was the natural gas chart. You'll notice here that it broke that downsloping line. That is a valid trend line, and the reason why it's valid is from the high to the low on the first spot is an exact 78% retracement. And if you took a 78% retracement of the last high to the low, that came in where it broke at 5.30. That's when it really started to move down. We've already looked at the ABCD on this. It measured down to 472, and that's where it went, 472.50. So when a valid trend line breaks, that's very, very important information. I made my first fortune trading, not with the silver. The silver was different. Well, silver was a fortune when you're 21, 24 years old and you make a lot of cash. But anyway, the main thing that you want to do is you want to determine that trend line, once it breaks. Now, sometimes it'll break that trend line and pop right above it, and that's important information too. That's a false break of the trend line, and you've got to be able to react to that. That's where I made my mistakes in 1973 and 74. I would see these trend line breaks and thought that, well, it doesn't make any difference. I'll buy some more on the next cycle, and I did. And it worked. I'd buy some more in the next cycle. It'd say it was a 20-day cycle. Well, I would buy it. Would be up for 5 days and then down for 15 days. And believe me, folks, when you're in October of 1974 and that's happening every day, it was not much fun. It never bothered me. I mean, I knew what was happening. I just didn't smart enough to figure out, what I had done wrong. But it was actually a blessing in disguise because that's how I learned not to make these mistakes. Now, another one that I think is important, we were talking about this was on Tuesday, and we were suggesting here, let's just get this up, because this is the upside down version, hold on just a second, of the euro. This is the 15-minute chart. You'll see it's making the ABCD up there at 116. Now, folks, we're trading way below here. We're in the 114 levels. That's how much this is broken in the last few days. We're at the 1.7 relationship of that right here. Now, there's a perfect example here, because the reason why we put this example here, because you'll notice there it was setting right a perfect ABCD right at the 382 from Friday, November 5th. I mean, that's just absolutely spot on perfect. And as soon as we went below that, wow, it was Katie bar the door to the downside. So there would be an example of a pattern that fails and it moves down very, very rapidly, and that's when you're wrong. You've got to stand aside, and by golly, there's nothing else you can actually do about that stuff, because it just you have to correct your mistakes, folks. You have to correct your mistakes. Let's just move on to the next one. No, I've already covered that one. It's about the copper and the 20-man line and the 61% retracement. Just give me a second here. There was one here that I had to show you because I think it was important. Hold on just a second. Doc, got it. Where is it? Shut the front door. And there it is right here. Here's the one. Now, this is the gold market. Actually, there was a question about this that someone asked me about why I was all of a sudden so friendly to the gold market this week. And the answer to this was right here on this chart. Because you'll see the lows since November. We came down and made a low on November the 3rd. Then we rallied up right to the 78% level, right to the tick at 1801. Then we pulled down, stopped exactly at the 382. Now, that particular time, we had an order setting there at 1785 with a low of 1784. And it took off, and we got out of that at 1837. We traded in and out of it twice, but it was a very, very, very substantial move. Now, this weekend, pay really close attention to the newsletter, folks, because there's some real serious numbers up here in this gold between 1878 and 1901. I mean, really serious numbers. I mean, numbers that go way back into August of 2011. So we have to pay a close attention to that because it's going to be really interesting to see that. And it's also coming true in the silver that if silver should get above 27 cents, folks, I firmly believe that son of a gun is going to double in price. You just can't buy silver rounds. I called around yesterday to a couple of my old buddies, and they have one or two here and there, and that's about it. They're just absolutely impossible to get along with. Now, also another one that's in the news, they're closed today because of Armistice Day, and that is the T-bond market. This market just keeps giving it up, folks. You'll notice we went right up to the 61% retracement there, a little above that 163. I think we hit 164.01. And then, we've just broken really hard, get down to that we hit 159 and change already. And being closed today, who knows what they would be doing. So the bonds look very bad. Treasury notes look very bad. And they might use the inflation as an excuse, folks, but we've been looking at higher interest rates for well over a year and a half. That's what the bonds and notes have been telling. They've been going down. That means interest rates are going higher on those bonds and notes, okay? But in the market themselves, the Federal Reserve has been pumping stuff in there, and that makes it, a whole lot easier. So we're going to see how these things popped up. By the way, Mr. Z, I have brought Mr. Z's chart up because he's always so good to us here at TFNN. He was extremely bullish, the cup of Joe here, the coffee, and I want to bring this up just to show you how smart this dude is, folks. He's buying it there at 199, and I think it's trading at 213 today, and that was a beautiful 50% retracement. Just a perfect, just absolutely perfect spot on right at the 50%. And if you looked at this on an hourly basis, which I do not have the chart of this today, is that move between the 3rd and the 8th of November had a beautiful ABCD that measured right to 199. Now, if you were paying attention to I think the chart that we put into I'm sure we did, we had it into the 24/7 newsletter, had that marked as a, really, and I haven't traded coffee for 40 years. I don't intend to. I think I've traded cocoa once during that time, but I should because it's all electronic now, and it's really fair, to look at these things as we go through. I'm having trouble with the time sequences here. When I post these charts, the only way that I can post them in is to make them very, very small. So when I do that, I have to look very, very closely at, what we're watching here. Give me a second here we've got a break coming up in a minute. If you have any questions, it's 877-927-6648. One of the questions someone asked me, what would be a good book to read just to understand about the numbers and all this stuff? And there's a couple of them, but the same author is by John Michel, The Dimensions of Paradise, Michel. John Michel, he's from London. I met him many years ago. He passed away since then. But he wrote The Dimensions of Paradise, and he's wrote several books, but The Dimensions of Paradise was really a great book. It shows how these numbers fit all through the universe in the human body. And also, another one is by Manly Hall, Secret Teachings of the Ages. I'll talk more about that when we get back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we were chatting a little bit about some of the books that I have. I got lots of them, but the two that really describe the geometry of the universe and the secrets of it were The Dimensions of Paradise by John Michel, M-I-C-H-E-L, and the other one that is really, really cool is The Secret Teachings of All the Ages by Manly P. Hall. If you ever go to Los Angeles and you'd like to see some movie stars, don't go to Hollywood. Go to the Philosophical Institute up on Mulholland Drive. You'll pass the Mike Milken Estate about a half a mile before you get there. It's a big, beautiful building, all modern now. And if you've ever seen any of my webinars like you're going to see here on the 17th, you'll see this beautiful picture of Pythagoras that was painted by Augustus Nash. I'm sorry, folks. Augustus. I can't remember Augustus's last name, believe it or not. It was printed, he painted it. It's a life-size photo, a portrait, oil painting of Pythagoras, and it's in the, you've seen it if you've seen any of my things. But anyway, it's in the Manly Hall Institute there. But he has all of these incredible books. Manly Hall was born with a platinum spoon in his mouth, and his mother self-taught him all those years. He wrote probably 60 or 70 books, but his main one was The Secret Teachings of All the Ages. In 1990, it came out in a leather bound, signed by Manly P. Hall. I was able to buy one of those for $500. I turned down $6,000 on it a few years ago. Manly Hall died in 94 or 93, somewhere in 1993. He was almost 100. Augustus Nash, isn't it? Augustus Nash. I can't remember Augustus's last name. Okay, let's not worry about it. Anyway, we'll worry about it. And he's got some really great stuff in there. But he goes through the Masons, all of these things. I mean, just incredible, all the stuff that he did, going back to the Babylonians and all this stuff and how it all relates. And it's just really, really super good stuff. Okay, now let's get back to the markets a little bit. One of the reasons, this is a chart that I want to bring it to your attention. This is the one from the newsletter, because this is how we try to determine whether these things are going to be really strong or not. This happens to be the chart from the newsletter that was sent out Sunday morning, and this was the gold that we were looking at. Now, you'll notice the Gartley pattern that occurred down here at 1760. That's where the buy was. The low was 1756.5, I believe. And then we had a really strong move. And then we had the little 2-day pullback on the 4th and 5th. That came in right at the 382 at 1785. The low was 1784. And there we closed on Friday. You see at 1820. And we were saying here above 1855 expects much higher prices. And we've been to 1878 so far. No, we've only been to 1870 so far. 1878 is the key number. See, we blasted through the 1.618. That tells us we're going to go higher. Now, when that happens and you're looking at a 4-hour chart, you've got to go to the daily chart to see what those next numbers are, and that's what we've already done. And we know that that's somewhere between 1878 and 1901 is where we should have that major correction there, because we'll be up at that point. If, say, we get to the, that's going to be up $200, $200 to $220 an ounce. That's 4 harmonic numbers. So from that level, we should get a very, very significant correction. And you got to be ready to buy that, folks, because the players are coming back into the gold and silver market. Silver had good increase in open interest yesterday. Also in gold, a good increase in open interest. Now in the crude oil, when it was making new highs, you didn't see that. There was no increase. They didn't care. The same thing when we went up with the stock indices. About 2 months ago, the high open interest in the S&P was 3.2 million. We're now lucky if we get 2.5 million. So we've lost a lot of players in the S&P market. I know it's going up, but that's mainly short covering. So that's another reason why the market could be in a very vulnerable position if it does that. So remind ourselves that for the 15th millionth time, it's not how much money you make, it's how much money you don't lose. That's why the euro trade may not work. I've had 3 emails from my students from around the world that say this is not acting very good because we've been in it for well over, we've been in almost 10 hours already. Still has a small, I don't know if it still has a small profit or not. Let me double check here. I can't check it right now anyway, so not to worry. I'm looking. Yeah, there. Yeah, it's okay. It's got a $60 profit, which is basically nothing. So let's remind ourselves that's what we're paying attention to right now. We just made a beautiful. Those of you that like ABCD patterns, we just made a beautiful ABCD pattern up there at 46.55 in the old E-mini S&P. The 382 on this run is 46.59. I think the high was 46.60 earlier this morning, but that small ABCD was on a 4-minute chart. It's already backed off about 3 points. Doesn't mean very much. But anyway, we don't know which one of these, whether these things are going to go or not. And frankly, I don't watch the machine very much, folks, because when I first met Mark Douglas, he was going over all these things with Merrill Lynch. He had 10,000 accounts, and he was going over them to see why they lost and why they won. And the people that lost most often, A, they didn't use a stop, or B, they used a stop that was way too close. I mean, right in the flutter or the normal, what we call the flutter of the market. So that's why with that, when they're doing that, that means they don't have a plan. That's the one thing you do have with ABCD, folks. You have a plan, because when it goes past D, your plan ain't working. That's that simple. That's why if we go past D here in the euro at 114.50, if we get down to 115.45, you're going to take your $120 loss and go to the crybaby factory and worry about it tomorrow, because you don't know when these things are going. That's primarily what we're paying attention to here, trying to teach you some of this stuff. But luckily, we're going to have Paula Douglas tomorrow, because Paula was so instrumental in writing his books for him, because she did all of the editing. She did the whole thing, and of course she's has quite a few. Her educational background is in that area, so it was a match that was made pretty easily. So that's the main thing. Okay, let's see. Any other question? 877-927-6648. We've only got a minute or so to the next and final break, and then we'll get back to things for tomorrow. We'll have Paula Douglas on, and then tomorrow I want to cover some commodities tomorrow, folks, because hold it, we've got a someone calling in. And we have Mr. Z on the line. Mr. Z, how are you, my friend?
Larry, I'm very well. Thanks for taking the call.
John, you were lucky. I had to pick you and 12 other people, and you just got it by the luck of the draw.
Well,
it was
somebody is finally looking over my shoulder. Hey, I wanted to ask you about the E-mini S&P futures. Larry,
yes.
Hold on, we got to pay. One question. The rally into 47.12 back on Friday the 5th.
Yeah, we'll pay a few bills. Stay with us, partner. Stay with us.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Okay, we're back, folks. We're talking with John, Mr. Z, talking about the E-mini S&P. What is your question, John?
Thanks for posting that daily chart, Larry, on that instrument. That chart that you posted is the stitched together September then December contract as we went through the rollover.
Yes, sir.
I just find it of interest when I look at merely the prices exactly, just of that D's contract. The September 2nd high, that October 4th low. The Fib 1618 expansion target was exactly 47.12. That's where the market peaked last Friday. So there's a bullseye within 1 point on the Fib 1618 idea that you taught me so many years ago. Well, we've turned a little bit, that's true. We pulled back, that's true. It's nothing significant as of yet. May not be, of course. So my question is, how far does, long-term high?
Very simple question to answer. 46.20. 46.20. The reason that the 1.618 expansion of that move on the hourly basis came in at 46.25. I think we talked about it. We couldn't show it yesterday, but 46.25 was a low. Since that time, we've been able to rally 30 handles right up to the 382. A, that is not bullish. And then B, if we get back below that 46.25 one more time, 46.20 print, I believe you'll start to see the market see handles in the 45 area. But it's not going to go straight down. There's just too many people that are still bullish. There's no reason for them to be scared yet. The scare will come later on, but this is how markets roll over. And I try to find opportunities just like you do, and that's what I'm looking at, is what I just talked to you about.
Larry, thanks so much. Clear, concise answer. I appreciate that.
Thank you very much for calling in, John. Always great to talk to you. Live every day in an attitude of gratitude, folks, and may God bless.